Imagine just for a second the sheer volume of global commerce happening right at this very instant. We're talking about billions of dollars moving through digital space every single minute. And the catalyst for all of this? Often, it's just the simple act of you entering a 4-digit PIN at a checkout counter or tapping your smartphone. But here's the thing. Every single time you type that PIN or an interbank settlement is executed, you are relying on a secret. If that secret is exposed, even for a microsecond, the trust in our entire financial ecosystem crumbles completely. So where do these cryptographic secrets live when they aren't being used? I'll tell you right now. They aren't just sitting in some standard database. They are locked inside a physical fortress. Welcome to this explainer on HSM and cryptographic key management in payment security.
Okay, let's dive into this and map out our journey. We're going to start with the microhook, the PIN, then look at the vulnerability gap, explore the physical solution, which is the HSM, break down the master key hierarchy, walk through the key management lifecycle, and finally, look at securing the end-to-end flow.
Starting with Section 1, the microhook, the PIN and the high stakes of everyday transactions.
A lot of people just assume a PIN is quickly checked by the bank, and bam, the transaction moves on. But in reality, it is a high-stakes gauntlet. When you enter a PIN, that value is instantly encrypted, securely transmitted through complex payment networks, and rigorously checked against multiple security controls. The core goals are simple enough: verify you, stop fraud, and protect the funds. But what's truly fascinating is that your transaction can be declined even if your card is perfectly active and your account is totally flush with cash. A wrong PIN, a tiny error in retry controls, or a failed underlying security check stops everything in its tracks immediately. PIN management isn't just about storing a static number. It's an active, real-time security apparatus.
Now, all of this encryption protecting your PIN obviously requires cryptographic keys, which brings us to the absolute most critical question of this entire explainer. We know encryption protects the payment data, but what protects the cryptographic keys themselves? Think about it. If someone gets the key, the locks don't matter at all. We are shifting our focus right now from the user's PIN directly to the hidden structural load bearers of the entire economy.
Moving to Section 2, the vulnerability gap between encryption and key management.
So the crucial point is that standard encryption algorithms alone are totally ineffective without a robust key management system. Let's say you have a standard cloud server running your core business logic. Running cryptography directly inside a standard server memory pool, like an exposed Java, Go, or Node.js environment, leaves those keys incredibly vulnerable. They're just sitting there, exposed in volatile application layers. A simple memory dump, a Heartbleed-style bug, or a compromised root administrator could easily extract the key. We have this massive vulnerability gap between a typical cloud server and actual cryptographic isolation. That's why key management isn't just about generating keys. It's the strict discipline of securely managing them so they are never left fluid and exposed in standard server code.
Section 3. The physical solution, also known as the HSM, the silent guardian behind secure payments.
And this brilliantly illustrates our physical solution, the Hardware Security Module, or HSM. It's a tamper-resistant device that acts as a literal physical fortress. It generates, stores, protects, and manages keys. It is the definitive physical root of trust. You know, if a hacker in a movie wants a key, they just type really fast on the keyboard. But in reality, if an attacker tries to physically drill into an HSM, freeze it, or crack open its epoxy-shielded enclosure, reactive internal copper meshes instantly detect the variation in voltage or pressure. The result? Instant zeroization. The keys permanently erase themselves in nanoseconds. It is uncompromisable physical security.
Beyond just standing guard over keys, the HSM is an absolute powerhouse of cryptographic processing. It handles PIN encryption, digital signatures, and validating that CVV number on the back of your card. By taking on all of this mathematically heavy lifting, the HSM offloads these sensitive operations. This ensures the main banking system remains incredibly fast without ever having to process raw cryptographic secrets itself. Whether it's an ATM withdrawal or a digital wallet payment, the HSM sits right at the center, silently mitigating risk.
Let's look at Section 4, the master key hierarchy, where we organize this cryptographic ecosystem.
Now, what's really interesting about this slide is how it makes sense of this massive alphabet soup of payment acronyms. It all breaks down into a strict hierarchy. At the absolute top, locked permanently inside the HSM, is the LMK, the local master key. The LMK protects every single other key below it. Now, if you need to securely exchange keys between two different financial institutions, you'd use a zone master key, or ZMK.
Further down, the physical terminal you actually interact with at a store uses a terminal PIN key, or TPK, to encrypt your PIN block at the exact millisecond you type it. It is a cascading ecosystem of trust, all securely anchored by the physical HSM.
Going even further down the chain, we have keys dedicated solely to verification, like the PVK for validating PINs and the CVK for checking card authenticity. But the real magic happens right at the transaction level with DUKPT, which stands for Derived Unique Key Per Transaction. This is huge because it ensures that every single time you swipe or tap your card, a brand new, completely unique encryption lock is generated for that specific transaction. So even if a bad actor intercepted it, that key can never ever be reused.
Section 5. The Key Management Life Cycle, taking us from generation all the way to destruction.
So, the journey of a key is a highly dynamic operation. It starts with key generation, born securely within the tamper-resistant boundaries of the HSM. Then comes key distribution, moving the key exactly where it needs to go without ever exposing it. Next up is key storage, keeping it totally safe when it isn't actively working. And finally, key usage, where it's actively decrypting PINs or authenticating transactions. Every single key has to be meticulously tracked through all these phases.
But the life cycle doesn't just stop there. Keys get old, and using the exact same key forever is a massive security risk. So we have key rotation, replacing old keys with fresh ones. If a system is compromised, we trigger revocation. And most importantly, key destruction. Keys must be systematically and securely destroyed so they can never be dug out of some forgotten hard drive years later and compromised. Overlooking this back half of the life cycle is exactly how massive data breaches happen in the real world. And finally, constant auditing and monitoring ensures the whole system is operating perfectly according to policy.
Section 6. Securing the end-to-end flow. Let's move to and see how this builds a complete three-layer breakdown. So here we are, pulling back to look at the entire security stack in action. At the very top, we have our host and application layer. This is standard software. It gathers the transaction data from the store and handles the core business logic. Right below that is the Key Management System, or KMS. The KMS orchestrates all the logical policies. It checks authorizations, references access rules, and routes the key requests. But remember that vulnerability gap we talked about earlier? Both of these top layers are abstract software. If an attacker breaches the operating system, these logical rules could potentially be bypassed. They are absolutely essential for routing and logic, but they are not the ultimate physical defense.
That ultimate defense is the HSM. Let's trace it. When the host layer has a transaction that needs decrypting, it doesn't just ask the KMS for the key to do it itself. No. Instead, the KMS routes the encrypted transaction payload straight down into the physical boundaries of the HSM. The HSM does the heavy math internally, right inside its hardened environment, and then spits back only the verified result to the core banking processor. A simple yes, this PIN is correct, or no, it's false. It never exposes the actual keys to the fluid software layers above. The secret literally never leaves the physical fortress.
I really want to leave you with this thought. The best security controls are usually the ones we never notice. Every single time you casually tap your card or type your PIN, an astonishingly complex dance of key generation, derivation, and physical zeroization is happening in milliseconds. It is a flawless choreography between abstract digital data and uncompromisable physical hardware. So, the next time you hear that little beep at a checkout counter, ask yourself, just how many layers of physical, self-destructing armor are currently standing between your bank account and total chaos? Thanks for joining me on this explainer, and I'll catch you next time.